check it out on my website. I have a video specifically about the triggers. So we're going to go low to high here. We actually are holding the 236, which makes me a little suspicious that it's going to head down a little more. I think we're going to see, newer highs here, but that's not based too much on the fib work. It's based more on experience with this. But there might be a pullback first. There are a couple of things to look for here. Again, here's our price projection. That's lining up pretty well with the 50% level. One of the things that's making me think about a pullback is the timing. The timing work, and I'll show you what these guys are telling us. First of all, this one is not in play yet, but what I did was I took a look at the high to the next high, projected forward with fib ratios. This is coming in next week, okay, February 15th. Now, these timing ratios don't create new swing extremes. Some people will say timing for a high, as though it pulls price upward. It's not. It's what I call timing resistance. In other words, it will create a difficulty with new highs. Now, this one is high to low. That's pretty important stuff because you're measuring the prior swing in time. All right, 208. I think that was yesterday. This is a time expansion. This is some of the strongest stuff that we have, timing-wise. And what this is doing is, see how the line color is different? It's a different tool. This is low to high, projected from low. So, for example, you see this one value, 100%, landing a couple of days ago. What this is saying is that the prior rally, number of bars projected from the current low for the current rally, matches a couple of days ago. So we have a lot of little, I'm calling it little timing factors, because we don't have them all lining up in one place. If they all lined up together, it would be like, watch out. That would be pretty major. We also have low to low coming in about the same time. So what is this saying? 06, 07, in February 06, 07, 08. This whole area is, potential timing resistance. Now, what's interesting, I said the 215, February 15th, is not coming into play yet. If we continue to rally, this is really strong stuff. We have 618 of the prior low to low swing. We have 1272 target ratio of the prior rally projected from the start of the current rally, and we also have that ratio on the 15th. So that's within a day of each other, 3 ratios. Let's watch out, 15th and 16th next week, if we are still rallying. Is that a substantial timing resistance? Okay. Yeah, I don't think I can change the label size. So that's the best I can do with it. All right, let's take a look at crude. Oh, we did already. Sorry. Actually, what I wanted to look at was, I don't know if any of you trade ETFs, but GLD Weekly has a very interesting setup. Again, for the longer term perspective. I took all the levels off of this so we can build it together. All right, I'm not going to go all the way back, to 2008 on this. I need to take a more recent pivot. By take, I mean use it. Low to high. All right, so this held at the 618. On a weekly chart, I definitely like to see it close below that level. And what else do we have? I don't know if you folks are familiar with the Gartley pattern, but that's what we have here. I'll show you. On this swing up, we stopped right between 618 and 786. If we start to break down from there, that is a potential Gartley or ABCD correction. The idea of the Gartley, what's really important about it is a lot of people say, hey, look, we took out that prior swing low. It's time to short. But if that move downward started between 618 and 786, it's more likely that the shorts are going to get real head faked. Because probably the downside target from the next low to high is going to serve as support. And that's what happened. We knew to aim, depending on your trading time frame, if you wanted to not count on that Gartley forming, you'd focus instead on the idea that we're looking at the target from the prior low to high. And that's exactly what got hit. Now we need to build the resistance. And this is where it gets a little interesting. High to low. And we have the 618 here. And what's really important, the price projection. Low to high, projected from low. And you see that's still holding. This area is holding. I mean, I'd be a lot happier once we clear the 171.50 area. Why is that important? Because that is the price projection of the start of a downtrend. So we want to see if we're long, and we'd like to hold this long, we want to see that price projection broken to invalidate the idea of a downtrend forming. Okay, so that's where that stands. Yeah, well, I could expand the chart, but the problem is then a lot of people will say that it doesn't fit on their monitor. This is a very big monitor. That's why it's showing us half of the chart. The gold we did, and you got a nice little timing example. Seeing what else we should cover at this one. Oh, here's for shorter term traders. Here, this is a current. It's pit session, but here is a Russell 3-minute. We work with the Russell in the chat room as well as other contracts. And you see what happened? Down, 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 down. The 786 held. If it had broken, let's see where this was drawn from. Yeah, see, low to high. If this had really been shifting pattern already to downside, we'd see the 786 support break, and the initial downside target would have been 820.40. Okay, so that's that. And I'm just thinking about what else we should cover chart-wise. Why don't I see what we have with questions, and then I'll get back into the charts, because maybe there'll be a question I can illustrate. Okay, why don't I use candlesticks? Candlesticks are fine, but these are my Fibonacci charts. I have other charts that I use for my triggering and trade management. And the thing I found is that if you use candlesticks to do the fib work, each bar, each candle is wider than with bar charts, and you have to scroll around a lot more to find the pivots. So these are not necessarily, especially the intraday charts, like this Russell chart, This is nice to do the fib work, but I have specific